Yesterday, the S&P 500 dropped 3%, Nasdaq dropped 4, and I think the Dow closed around down 3% as well. So that is a very huge move for any one trading day, and that was not seen until I think earlier February this year. There was some similar movements like that, more than 2% moves, I'm pretty sure. And I have people that have questions about what's going on, what should I do, and they're freaking out. Uh, I've researched this topic for an extensive period of time, and so to me, a 3% one day drop isn't really something to freak out about. But nonetheless, I'll give couple of takeaways from what I see is happening and what investors can do today. Okay, so there are a variety of reasons for the sell-off yesterday. Some say that the market is taking profit before going into the US midterm elections, the earning seasons. Some say it's inflation or interest rates. Others blame the trade tension between US and China. Well, fundamentally, the US is still in a stronger economic shape than the rest of the world. It's better than Europe, it's better than Japan, it's better than China. So there isn't any kinks into this economic growth in the US. Unemployment is low, interest rates are rising, but that's because of the rapid growth and real wage growth that happened recently. More people are going in back into the job market and wages are rising up. So that's mainly the reason why. Thus, I think this recent market sell-off is not rational in a sense because economic fundamentals are strong. Okay, despite the government deficits that are happening right now, fiscal policy is very stimulative. So I don't think that anything will go wrong in the near term for the economy. But that being said, the market is not the economy. The most recent sell-off could be a combination of all the factors that I previously stated, but again, there is no deep flaw in the US economy. That being said, if near term we see any changes, there could be fundamental consequences, like if, say, the elections or earning seasons go unexpectedly different from what people thought would happen, there could be further decline. On a technical standpoint, I checked the S&P 500, I checked the Nasdaq, I also checked the Dow Transport. I'm building off a little on Dow theory. All of them show bearish signs. They broke through their trend lines, and this decline could go further into the future. So what should investors do? For those with a long-term view, and you don't want to be bothered with these short-term or intermediate-term fluctuations, do nothing. That's what I chose to do. For those that want to game the market through trading, sell or short with leverage. Various indicators have that I know of point towards the decline persisting. So we'll see if I'm right or not. I also use investing.com as a reference. There's technical indicators there, so use those as reference too. And also bearish signs. For those that do not like either opinions, consult with a financial advisor or a financial professional. Again, folks, I am not a financial professional yet. So if you have any questions, or if you have varying circumstances, like say if you plan to retire 2 years from now and you can't afford another market loss and you're not sure what to do, go talk to a financial professional. And well, like last disclaimer, this content is my own and they are not to be taken as professional financial advice. At least not yet, until I graduate. Okay, if you guys have any questions, like usual, feel free to ask me, DM me, I'll be happy to reply. I will also be happy to discuss and talk about if you have any different point of views. Thanks, guys.